U.S. Market Weekly Summary, week ending January 31, 2025. The U.S. stock market experienced a mixed performance this week, with the S&P 500 index shedding 1% amid concerns about competition in the technology sector and the Trump administration's tariff plans. Despite this weekly decline, the market benchmark ended January with a monthly gain, showcasing the resilience of the broader market. S&P 500 performance. The S&P 500 closed Friday's session at 6,040.53. While this marks a decline from a week ago, the index remains near its record high of 6,128.18 reached last Friday. It is also up 2.7% from the end of 2024 and up 25% from a year ago, reflecting a strong upward trend over the past year. Quarterly earnings reports. This week, the market received quarterly earnings reports from a number of companies, with many surpassing analysts' mean estimates. Notable among these were Apple, AAPL, and Visa, V, both of which delivered strong performances that held up investor confidence. Federal Reserve and inflation. The Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures Price Index, met expectations with a 0.3% increase for December. On Wednesday, the central bank's Federal Open Market Committee maintained the range of its policy rate at 4.25% to 4.50%, as expected. However, changes to its statement indicated that inflation remains elevated, while an acknowledgement of progress was removed, signaling ongoing concerns about inflationary pressures. Impact of tariffs. Investors are increasingly nervous about the potential impact of the Trump administration's planned tariffs on inflation. On Friday, White House Press Secretary Caroline Leavitt announced that President Donald Trump will begin implementing a 25% tariff on Mexico and Canada and a 10% tariff on China on Saturday. These measures have sparked concerns about potential disruptions in trade and economic stability. Technology sector challenges. The technology sector faced significant challenges this week, with a 4.6% decline, marking the largest percentage drop in the S&P 500. This downturn was driven by worries over competition from DeepSeek, a Chinese startup company that has entered the artificial intelligence space with a new AI model, generating considerable chatter in the industry. NVIDIA struggles. NVDA, was hit the hardest in the technology sector, falling 16% on the week amid investor concerns over competition from DeepSeek. The entry of new players in the AI space has heightened competitive pressures for established companies like NVIDIA. Sector performance overview. In addition to technology, other sectors also experienced declines. The energy sector fell 4.02%, with shares of ONEOK, OKE, dropping 7% following the completion of its acquisition of EnLink Midstream. The utility sector saw a 2.03% loss, while industrials, real estate, and materials also posted declines. Communication services rise. On the upside, communication services rose 1.96%, supported by strong performances from T-Mobile US, TMUS, and Meta Platforms, Meta. T-Mobile climbed 6.6% on the week, aided by better-than-expected fourth-quarter results and postpaid phone subscriber additions that exceeded Wall Street's projections. Similarly, Meta Platforms shares increased by 6.4% as the Facebook parent reported Q4 earnings and revenue above year-earlier results and analysts' mean estimates. Consumer staples and healthcare gains. The consumer staples sector advanced 1.39%, with notable gainers including Kroger, KR, up 5%, and Costco Wholesale, Cost, up 4.3%. In healthcare, ABBV shares jumped 8% following better-than-expected fourth-quarter results, driven by robust sales of its Skyrizi and Rinvoq drugs. The strong performance prompted the drug maker to lift its long-term combined revenue outlook for the two immunology drugs. Upcoming earnings and economic data. Looking ahead, next week's earnings calendar includes reports from major companies such as Google parent Alphabet, GOOGL, GOOG, Merck, MRK, PepsiCo, PEP, Advanced Micro Devices, AMD, Amgen, AMGN, Pfizer, PFE, Walt Disney, DIS, Qualcomm, QCOM, Amazon.com, AMZN, Eli Lilly, LLY, and Philip Morris International, PM. These reports will be closely watched by investors for indications of company performance and broader economic trends. Economic indicators. Economic data releases next week will feature January employment numbers, with ADP's private sector employment report on Wednesday and the government's non-farm payrolls and unemployment rate due Friday. Other data on the calendar includes January automotive sales, December factory orders and wholesale inventories, and January consumer sentiment.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.